All right, in this lesson, we are going to be looking at income tax. Now, we're going to show you a basic calculation of calculating income tax for principles of accounting, but know that it gets a little bit more complicated than this. Again, we're just trying to help you understand accrued expenses, which is why we're showing you it here. So not everything that we're going to show you in this lesson is exactly how it's done in the real world, but we still want you to know how it's done. Just the mechanics of it, because the calculation is a little bit different, but once you kind of do it, you'll understand how income taxes are accrued from an expense standpoint. So let's get started here. Companies are often required to pay income taxes based on a percentage of their net income. So generally how it works is they've got this net income, and then we apply a percentage to it, and whatever we get from there, we get the taxes that a company is going to have to pay. The problem is there's a timing difference, so we're going to have to accrue those expenses prior to the payment. Now, income tax is generally an accrued expense type of transaction because oftentimes income tax is incurred during the year, but is not paid until the following year when the books are all closed. We must adhere to the matching principle, and so an income tax adjustment is necessary. So if you think about it, if we're in 20X1, for instance, and we start the year on January, and we go through the year, we can't really calculate our taxes until the close of the year. Well, if we can't calculate our taxes until the close of the year, we don't really know how much to pay. So what's happening here is we're going to incur the taxes throughout the year, and at the end of the year, we're going to figure out what our taxes are. When we figure out what our taxes are, it's already the end of the year. So we're going to make an adjusting entry to book at least some type of income tax expense. And then in March of the following year, we're going to pay our taxes for the previous year's income. So that's kind of how it works from a very basic level. Now, how do we calculate our taxes? Well, we've got a simple income tax formula that you're going to use. We're going to take the taxable income or the net income. So if they don't give you taxable income, use the net income. If they give you a taxable income, use that instead, but basically the net income. We're going to multiply it by the income tax rate given to you. We're not going to make this complicated. We're just going to give you the income tax rate, and then that's going to give you your income tax expense. So super easy formula. Net income times the tax rate equals the income tax expense. So let's jump into an example here. In section 3 of this course, we prepared this income statement for Walnut Creek Inc. Assume that Walnut Creek Inc.'s tax rate is 21%. Walnut Creek will not pay their taxes until 20X2, which means we have to accrue it in order to make sure that their income statement is proper at the end of the day. Calculate the income tax expense and prepare the journal entries for this adjustment. So let's take a look here. We've got our calculations here. It looks like we're going to have to take the net income and we're going to multiply up our income tax rate, and then that's going to give us our income tax expense. Well, if we look at the previous slide here, we know that our net income is $7,775. So we are going to use $7,775 times our tax rate. We said that the tax rate was 21%. If we do that, we are going to get $1,632.75. So that's the expense that we're going to have to accrue right now because we won't pay it until March of the following year. So what has happened? Well, we have an increase in expense and we have an increase in our liability. So increases in expenses are a debit. So we're going to debit income tax expense for $1,632.75, and then we're going to credit the liability. Well, what liability? Well, we can use accounts payable. Some people would say income tax payable, whichever one is fine. I'm going to use income tax payable just to get that in your ear. So income tax payable for $1,632.75. Now, some people might go, why income tax payable instead of accounts payable? What you're going to learn as we go advanced in this course is that typically we reserve accounts payable for things that help us pay for inventory. If it's not inventory based, we usually like to use something more specific. So this is more specific to what is actually causing the liability. In this case, taxes. So that's why I use income tax payable. So what would the payment of the cash look like? Well, we're going to reverse the liability and we're going to actually pay the cash. So let's use the easiest one first, which would be cash. Cash goes out the door. That would be a credit. So we're going to credit cash for $1632.75, and we're going to debit the release of the obligation to the federal government. In that case, income tax payable for $1632.75. So that would be our entry for income taxes. So that is a quick look at income tax expense. Again, not too complicated to calculate. Really, it's just finding that net income, finding the tax rate, and then getting that amount. And then once you do that, you're going to accrue it, and then we'll pay it off later on. So hope you got all of that, and we'll see you in the next lesson. Hey guys, it is Patrick. Don't forget to press the like button and share this video with someone who could get a lot of use from watching this lesson, like maybe a classmate or maybe a friend or maybe just a parent, just because you wanted to share this video because you're very excited about what you saw. Share it with someone. And if you want to help us grow and help us make sure that we put the very best in accounting topics out on YouTube, make sure you press the subscribe button and turn on that notification bell. That way you're alerted every time we post videos to this channel. Now, I do this with every one of my classes at the end of class. What did you learn from this lesson? Put that in the comment section below and I'll respond to you on what you got out of this video. So hope you enjoyed this video and we will see you in the next lesson.